What's up, everyone, and welcome back to the Bitcoin Economy Podcast. Today, we have Farmer Joe, one of my favorite investors in the Bitcoin space. He's an investor in Maestro, a great advisor, and overall mentor for us and also the ecosystem, and excited to have him on. So, Farmer, welcome. What's up?
Hey, Davis. Yeah, it's always my pleasure to hop on with you guys and just share things. Appreciate the kind words. Yeah, there's quite a lot. We were just chatting right before we started here. We're doing this in what feels like a bit of a crypto price melt up. If I want to say, like, granted, builder vibes have been exceptionally high in Web3. Stablecoins, obviously, driving massive amounts of interest and adoption from banks and, neobanks. And, life's been pretty good on the builder side. But look, as of 15 minutes ago, we went from 122 all the way down to, 112K. I think some people are hurting.
Yeah. So, I guess let's kick it off there. What are you seeing that moves Bitcoin's price?
Yeah, I mean, look, throughout the years, like Bitcoin's been such a complex asset to trade. I mean, its correlation between S&P, risk assets like tech stocks, global macro conditions like gold, it truly is like an asset class on its own that is usually, I mean, it correlates and then it decorrelates, which is the crazy part is, you have to have traded Bitcoin at least for years to truly understand like what seems to be moving it. As of today though, like we're looking at Bitcoin as a risk asset. Everyone was hyper bullish, stocks all-time high, gold all-time high, and 2 days ago, 3 days ago, whatever it was, Bitcoin price all-time high. Um, and so, everything was pointing to like this Q4, golden bull run opportunity where, we're gonna have peace in the world, we're gonna have AI revolution, and look, like I think the drawdown today is not related to, the announcement of an Israel Palestine peace agreement. Far from it, actually. The major news headline is, everything about Trump and tariffs again. It's quite funny because, about in April of 2025, which was, just around 6 months ago now, give or take, 5 months ago, whatever it was, we did have this market melt up that pulled back equity markets, pulled back Bitcoin price, and it is truly almost like we're just entering another, market melt up of chaos. Um, yeah, tariffs spook the every market, quite frankly. Oh, jeez.
Yeah, it's kind of crazy. So this morning I woke up to the news of AMD ripping. It was up like 45%. And my first thought was like, man, this has to be a bubble. Like in $150 billion company going up 45%, like is this a meme stock? Like how is this possible? And then a couple hours later, Trump announces the tariff news. Boom, the entire market plummets. Uh, so it's interesting times. The fact that things are so volatile, that the stock market is so volatile, this feels like a bit of a new paradigm for me. And then the other part that's interesting is I always thought that Bitcoin would really be inversely correlated with the stock market, and that when the stock market collapses, people are going to rush to Bitcoin potentially as a store of value. But it seems like there is still a strong correlation in just individuals or institutions looking to withdraw money in any sort of risk exposure during tariffs. So I mean,
Yeah,
what do you
yeah.
think about that?
I look, all markets are, whether you love it or hate it, are all kind of correlated to some degree, right? There is no such thing as a true kind of, global hedge. If the stock market were to collapse, it's like good luck trying to find an asset that is, supposed to go in the opposite direction. For many years, like that was, what the role of bonds was supposed to be, right? Like everyone's just like, well, you got your equity upside, and then, you have your bond allocation for your downside protection. And, then we had the total collapse basically of how bonds are even, uh, like rather uncorrelated. So yeah, the world is just a really complicated place, and if it were easy, if all markets were easy to predict, well then, people would make infinite amounts of money, and people would be able to bet on outcomes pretty effectively. But it just goes to show you that trying to predict the future is extremely difficult. There's always a different consumer preference, a different retail liquidity, risk tolerance. It ebbs and flows, and the global, I guess, capital market is such a living and breathing thing. As we're talking about it, I'm seeing Bitcoin at 110K. Like we are, oh, Davis, we're like 6 minutes into this, and when we started at 114. We're down to 109 now. Oh my God! Like this is just, you see what I mean? Like I'm saying this with a laugh on my face because at the end of the day, like I'm so long bias in my asset selection.
Mhm.
Um, you know, I was bullish on Bitcoin at 126, and I'm, even more bullish at 110. Look, I would love to deploy, more size, but yeah, I'm basically, fully invested at this point. Um, and it's working to my detriment here, at least in this given point in time, not to have a little bit of dry powder. Uh,
What's what websites do you use to track Bitcoin price?
Oh man, this is gonna be funny because like the most entertaining one that I have, it's just such a good dopamine spike. It's called Agger, AGGR.trade. The beautiful part about Agger, is the 1 second chart. It's got, especially in moments of volatility, especially right now when you have massive liquidations, and buys and sells, then it does make a beautiful noise, and yeah, certainly makes for a really entertaining watching experience. Oh my God, this is
This
crazy.
is
106K.
insane.
Yeah, so
107.
you see like yeah, it's quite fun. I mean, oh man, 105K. Oh my God, what is going
Wait, you're
on?
seeing 105?
Yeah, I see 105 and in between somewhere there. It depends. I mean, there's a lot of exchanges, so yeah. I think the true price is a blended right now of like between 106 and 107. But oh man, this is crazy. We're back to 110. Oh my God.
This is
I've never seen. By the
insane.
way, it's crazy that we're doing it on a day like today, because I've truly never seen something like this. In a very, very long time. And in fact, last time I just tuned out. It wasn't really healthy.
Yeah, this is absolutely insane. And then for context for our listeners here, uh, one, go check out aggr.trade. It's pretty wild, but what we see is on the right side, the bids, asks and sells, for Bitcoin, and it's all over the place. It's bleeding red, but then going green, and the price is swinging. So there was a second ago, 105,000. Then it's up to 110,000. Now it's down to 108,000. But this is updating much more real time than a Google is, or or Coin Market Cap or wherever else you see it. So uh, basically, yeah, if you want to be a trader, come check this out. This is
I
crazy.
don't even know if traders use this, quite frankly. I think it's more for observers. But yeah, look, it looks like we're down to 105 again, and now we're at 104. Oh my God. Yeah, this just but I will say, like, Bitcoin does have a lot of volatility, and I mean it's got crazy volume. Like this is not normal. Like what we're looking at today is truly not normal, and it's quite an interesting sight to behold.
Wow, 103. It's moving like crazy. So I guess question for you: who do you think does the best in times of Bitcoin volatility? And oh wait, are we about to go below 100?
Yeah,
Holy shit!
not yet, but we're at 101,000. Oh my God, Davis, I don't know. Like we can talk about other things, but like, look, maybe we got to zone out for a hot minute. Yeah, look, pivoting back, Bitcoin is going to be okay, right? Like at the end of the day, Bitcoin is okay. It's a volatile asset, and as you can see here, it's an asset with a huge amount of leverage, right?
Mm-hmm.
So, in times of, I would say, massive headline news, something like, Trump tariffs, especially because, there was so much directional longs on Bitcoin from, let's call it 120, 115, thinking that it's going to go back to all-time high, because all equity markets and gold were, I think there's a lot of people that were thinking that there's like this gap catch up trade for Bitcoin itself. Um, and yeah, it's been leverage works on the way up, and as we see here, approaching 101K, now we're back to 106. Like that's a crazy swing. In a span of like 2 minutes, we have a 4% swing on Bitcoin price because of the leverage, because of the cascading leverage on the way down, and then people are trying to re-lever here, and we can keep this going, and who knows if we're going to go back sub 100K, but as we've seen just in the 12 minutes here that we've been talking, um yeah, you got to be an absolute psychopath to be trading Bitcoin on leverage, because you can have a fantastic year, 2 years, 3 years, and if you're caught on the wrong side of the trade on a day like today, and
Mm-hmm.
you are pretty well allocated on leverage, even something as minor as like 4 or 5, 10x leverage, 10x leverage, you would think that to get liquidated, a 10% price swing could never happen, right? But it does, and it truly wipes even some of the greatest traders out.
Mm. So what where do you think people are doing the most of this lever trading? Is this all hyper liquid?
Yeah, look, I think that's a really good question. Centralized exchanges still dominate all volume. Open interest, cost of trading on them is still relatively low. And institutions are definitely trading on centralized exchanges and not decentralized exchanges. Mostly because
Mm.
they're regulated, and compliance rules and so forth just make it easy to pass that line. Now, there is this like new trend of trading on decentralized exchanges. Um, I will say when it comes down to leverage, you're not doing spot leverage, you're doing perps, which is a derivative asset. And then again, if you have a very, liquid spot market and an even more liquid derivatives market, volatility certainly is impacted in that direction. But, going back, many people are using Hyperliquid, and Hyperliquid was kind of the poster child for the last, 12 months. They created a platform and yeah, they created a platform that truly works. Some would like to say it's just, I would say geographical arbitrage, regulatory arbitrage. I mean, I don't, recommend anyone doing this, but it is very easy to, log in with a VPN and get access to derivatives products that, would typically not be, available in a country like USA. Yeah, good luck trying to, buy perps on Coinbase. And so the on-chain piece is, it just shows you that there's money to be made, and there's, people that are willing to take the risk, and they want leverage that they can't, get where they're based out of. So yeah, super cool stuff overall. I'm a huge fan of more on-chain trading platforms. Perps is just one thing that I think are really exciting as a derivatives product. But we're probably going to see on-chain stock trading or on-chain RWAs and on-chain bonds. Um, Look, I don't know where exactly you're based, but I think you're based out of the U.S. and I'm right now I'm in North America as well. But we in the Western economy we have access to things like spot markets on equities. We have nearly an infinite amount of investable opportunities, and capital can truly go where it's treated best in that regard. But the rest of the world, Africa, and maybe Asia, and even Australia, and other places around the world, South America, there is a huge amount of limitations to not just U.S. equity markets, but U.S. derivative markets and U.S. bond markets. And I would say like the on-chain economy is a way to open up access to the investable universe across the globe. And I think that's the end game. And the more we tickle that regulatory boundary line per se, sometimes crossing it, of course, sometimes inching really close to the line. Um, but this is how you go from 0 to 1 sometimes. This is how you get regulators and the governments to truly notice that something needs to happen and that there is demand. And at the end of the day, the government works for the people, and if the people are all kind of at that line, and you know there's a lot of people that are crossing that line, the government is not there to do things against what the people are really asking for. And so I think we'd like to think that way, of course. Sometimes it takes a little bit more pressure, but I think on-chain markets in general, TLDR, it's just incredibly optimistic for them. And I think we're just going to keep inching, at that line until regulations truly make it, seamless.
100%. And a couple caveats. First off, none of this is financial advice for any of the lawyers out there. Do your own research. But I think one of the crazy things about crypto and hyper liquid and these decentralized exchanges that exist out there is the amount of leverage that you're able to use. So I'm looking right now at the Bitcoin to USDC uh, trade on Hyperliquid, and you can go 40x leverage on this thing, which is absolutely insane. So I think for retail, this is the first time that this amount of leverage has been accessible ever. And the volume that's done on these things are crazy. I think it's about to cross $10 billion in 24-hour volume. So before we jump into maybe what's the long-term practical use cases of on-chain trading, can you talk a little bit more about the casino? Because I feel like you've seen the casino, you've been around for a couple cycles. What's going on here with the on-chain markets, and how is leverage playing a role?
Yeah, look, I think on the on-chain markets, like I said, it's you give retail traders access to leverage, and they're going to be quite irresponsible with it naturally, and they're going to have to learn the hard way. I mean, we had this era where meme coins were, I would say, the maximum amount of leverage for your dollar, because you could have something go from 500K $1 million market cap to $1 billion. Like we've seen these. So look, I think the on-chain economy is still, I would say, more so a global casino. And I think I think it's going to remain that way, quite frankly, for yeah, and honestly, like an extended period of time. But naturally speaking, I do think that speculation is generally quite healthy. Um, it does lead to a lot of money flowing into, I would say, um, opportunities down the line. And, we do need speculation because that does allow significant amount of capital. It does open up the door to builders building. And I think that's all great, like it does hurt some people, um, but this is just the way the world works, and things are always going to be cyclical. And it's our responsibility as human beings, truly to learn from this and try to capitalize on it. So yeah, pretty wild stuff going on overall. Look, I've been a part of multiple cycles, and each one of them is easier to swallow, quite frankly. Um, yeah, the rush from 126K all the way down to 101K during this call. Uh, look, Bitcoin's still at over 100K, which is twice the peak of the last cycle, give or take. Um, I will be fine. We'll be fine. Just don't be irresponsible. But yeah, like this industry is just so nascent and so immature sometimes that things like this still happen, even though even though we're progressing to the right direction, but it's still extremely cyclical.
For sure. And I think the making a market and allowing retail in there ultimately I think will be a good thing. I think over time there's gonna be more and more, at least in the U.S., consumer protection, uh, similar to how we have regulated stock market and trading environments there. So we will see that, and maybe a bit more disclosures, and maybe there will be segregated crypto markets where it's like approved tokens that are accruing revenue in one bucket, and then you'll have the casino in another bucket, and maybe there will be some overlap. But I do think as the market matures, there will be some more guidance on like, okay, this is pure speculation versus this is a revenue generating business. Um, so that'll be cool. And I guess one question for you also is, are are hedge funds that are trading volatility. So let's just say uh, two prime, for example, is a Bitcoin um, is a Bitcoin strategy, and they trade volatility. Are these guys cleaning up right now when the price is just swinging back and forth? Because it literally in our call went from 126 to 100,000. Now it's back up to 110. So someone's got to be minting.
Yeah, look, I think at the end of the day, it really depends. It depends on how how they structured their risk. Um, Look, I think the key indicator is something like um I think it's like BVIV, or Bitcoin Volatility Index,
Mm.
right? And you can just go on TradingView right now, and Bitcoin Volatility right now is up to 664. So basically, the volatility index is up 50% on the day. Um, yeah, I mean, it really, depends. Like there's not a lot of instruments that you could trade volatility on. Options being one of them, but how you structure all of your options contracts, that's you got to be pretty damn smart about that. And
Mm.
just because let's just say you're long vol, but sometimes that you can be long vol and bullish the underlying. So in this case, to be right on a volatility strategy, you kind of need it to be like net short and long vol, I suppose. And I'm not really too sure on like what that would imply for to your options contracts, for example. But yeah, just it. I think the answer is it's there's an art to it, and you still have to be right generally directionally, but you can trade these volatility indexes, and BVIV is built by Volmax, which is actually a team that is a BTC5 builder. I've chatted with the founder plenty of times. Really like the guy. I think the indicators that they're that
Nice.
they're that they're
So I guess
building, super
let's
cool.
pull it back a little bit. And
Sure,
I
sure.
think one of your one one of the main things that you've done is I feel like you were a pioneer in the Bitcoin ecosystem and Bitcoin DeFi. You've sort of been around from the beginning of ordinals. I know you have an affiliation with Pups that maybe you could talk a little bit about, and you've invested in a lot of Bitcoin and Bitcoin Fi projects. Could you maybe give us an overview of the current Bitcoin Fi landscape and what your specifically your views on the market?
Yeah, for sure. So, the way that I see it is there is no crypto, there is no Web3 financial industry without Bitcoin entrenched in that. Whether that's, vaults and strategies or just trading in general. My long view is Bitcoin will be on as an asset, live on any dominant general purpose blockchain, whether that's for trading or for general purpose composable finance. Um, let's just start with that. The second part is Bitcoin is a blockchain, and thus Bitcoin has proof of work security properties that can be approached and tapped into to build safe and secure layers that roll into Bitcoin's security, and embrace the fact that Bitcoin is a blockchain, but it also is an asset. Now, I think most people view Bitcoin as an asset more than a functional blockchain. But, now we have NFTs on Bitcoin, which, I think, open people's eyes up to doing more natively on the base layer. Now, how much more can we do? That's a pretty, I would say, wild topic on its own that has mixed, very strong opinions from Bitcoin OGs, maxis, payments maxis, asset maxis, progressive maxis. There's a whole amount of views that you could have, but my general view is really twofold. Is back teams that are building Bitcoin based finance or just general crypto based finance with understanding and catering to Bitcoin holders. That could be apps, DeFi apps on Solana. That could be apps on other chains. That could be a better version of a Bitcoin wrapper that makes its over to Solana, to Ethereum. That's one thing. And I've backed teams that are pushing the needle on leveraging Bitcoin's security properties to build functional blockchains that I think have the edge because they will naturally support the most dominant, largest asset immediately, and the whole ecosystem will be formed around them. It's like building a country around a USD standard. In this case, building a country around the Bitcoin standard versus building a country around your net new currency, which is having to compete as money on that blockchain and everything else. And I think it's just much easier to start with what's been around for the longest period of time.
It does immediately lend legitimacy when you're working with Bitcoin. There's no doubt of what Bitcoin is. Everyone knows it's secure. Everyone knows it has value. So I think intuitively it just makes sense that, like you said, it makes sense to start with Bitcoin. and to build off the brand and value that already exists there versus launching a new layer one and having to compete in general with all the other tokens that are out there. I definitely would agree with you on that. The problem is with Bitcoin, it's not a get rich quick scheme like some of these new tokens that get launched, right? People there's no Bitcoin Foundation that can do a delegation to a giant wallet to get people to support Bitcoin assets like runes or BRC20s, because there's no one owns and operates Bitcoin. So you can't necessarily convince the entrenched incumbents that they have to come in Bitcoin and they have to support the DeFi ecosystem because they're not going to get rich immediately from supporting it. I'm curious if you've seen that as well, like across the board, or if, like what are you seeing that's prohibiting growth within Bitcoin Fi?
Oh man, that's a tough one. I mean, it's still such a immature user experience, right? Like
Mm-hmm.
I think what is inhibiting growth? Well, it's all about making sure you're targeting the people that actually hold Bitcoin or the people that care about Bitcoin the most. And there's a reason why they have accumulated quite a lot of their Bitcoin. It's because they didn't rehypothecate it, they didn't send it to centralized exchanges, they didn't fall for any of the altcoin Ponzi schemes, right? And so getting them to do anything with their Bitcoin is extremely difficult,
Mm-hmm.
because the risk of losing even a small fraction of it, say 5 or 10%, let's just say that they were to deploy that, well, it has to be worth it from the potential payoff from the yield perspective. And we haven't necessarily seen there to be any sustainable source of yield for Bitcoin that can scale with the amount of demand that and the amount of Bitcoin there is. I mean, it's a $2+ trillion blockchain, and if you're trying to generate 10% yield with with a sustainable stream, I mean, that in itself is well, I guess, yeah, that's $200 billion. So try asking anyone to create $200 billion of sustainable long-term yield. Well, centralized exchanges, even from trading fees, don't make that in a single year, right? So, I think it's a combination of like, well, how are you going to make that yield if there is not even that amount of revenue coming into, any single mass market product effectively in Web3? And then secondly, it's just like, well, like, how do you get around the mindset that whatever, you're building is safe and secure for those Bitcoin holders? So it's been very tough to build Bitcoin products. And then the third limitation is simply the limitations of the blockchain itself. There's no smart contract language on Bitcoin. It's not like Ethereum. It's 10-minute block times. It's slow. It's clunky. The reason why it's been around for such a long time is because change has been intentional, but change has been very slow. So there's a prioritization of safety, security, and conservatism more than there is progressiveness and risk taking. Quite simply, do you take risks with a $2 trillion asset? Um, you know, there's not a lot of people in this world that want to be pressing the button that does a change. Um,
Mm-hmm.
I certainly wouldn't want to be behind the scenes like that.
What do you think the killer app is for Bitcoin Fi? Like what's going to drive these these holders that don't want to do anything with their Bitcoin because they've just seen time and time again that people have been burned to actually start using their Bitcoin and doing something with it.
Yeah, look, I think the killer app at the end of the day is something along the lines of doing something with your Bitcoin. Therefore, collateralized loans. Now, I'm talking low LTV, reasonable interest rates. There's a huge amount of interest from traditional institutions that are serving this market. And
Hmm.
oftentimes, Bitcoin whales actually will go to centralized institutions and get a 7%, 11% loan on their Bitcoin. I mean, i simply because, like, they don't want to trust a smart contract. They don't want to wrap their assets and have any sort of, I would say, tax liability associated with wrapping an asset. They don't want to be, managing their LTV manually and so forth, or they don't want to have variable interest rate loans, which, in cases like today could spike to, dozens of percent or sometimes even hundreds of percent if there is a huge amount of utilization in those pools such that the curve on them increases exponentially. And I think the killer app is going to be someone who is able to tap into the most native version of Bitcoin and basically give fixed rate loans on Bitcoin in that regard, but give them in a way that enables people to actually use use the capital. In the case of like why these traditional institutions, why they are so effective at serving this market is because at the end of the day, people spend fiat dollars, and you need to get these stable coins or these dollars against your Bitcoin into the native form of spending. In the world today that we live in, stablecoins are not widely used. And so when we do have the ability to widely use stablecoins in a day-to-day aspect, I think that's really the critical unlock. So I think we're at a case of like we're almost there. We're almost at a point where stablecoins are actually useful on a day-to-day basis. They are currently useful if you know where to go, know how to debank yourself, use some of these new neobanks. But even some of the, latest and greatest neobanks, they still have sub $10 million in TVL. Um, and that's, it's a growing and exponentially growing market. But come on, sub $10 million worth of assets that are basically deposited into apps and being used is still not mass adoption.
Hmm. Yeah, I the neobank side, that's not something I'm as familiar with. I know it's becoming a more and more emerging thing. Bitcoin yield, that's something we're very interested in at Maestro, and I'll definitely connect with you more about it. Maestro's institutional product, but we are building something very similar to what you were just suggesting. So
Yeah,
I'm
I
not sure if
mean,
you're
look,
doing that as an advertisement, but we'll take
no,
it.
no. I mean, look, I love Maestro, and I think you guys are a fantastic team. And I'm not saying this, I'm saying this quite openly, and I'm biased here. Um, Granted, back to you guys, but I do think you guys are very well versed and have been able to pivot ideas and product lines and so forth to where the market seems to be heading. Look, I think at the end of the day, the institutional side of Bitcoin is changing drastically. As more and more DATs have formed, there is this natural inclination that they need to be doing something with their capital over time.
Hmm.
The Ethereum ones are generating a positive return and a revenue stream on top of their Ethereum. And I think, over time that is going to be the war chest of Bitcoin that is going to be maybe a little bit more risk on and maybe a little bit more into using Bitcoin as in a productive means.
Hmm.
More importantly than anything.
Yeah, I couldn't agree more. I think now that all of these DATs and honestly just corporations in general are loading Bitcoin onto the balance sheet, they're going to want to find a productive use for the asset. Additionally, something that I find cool is Ray Dalio. He talks a lot about the collapse of the U.S. dollar and our current financial system, and he poises Bitcoin as a legitimate alternative, and I think that narrative is being adopted more and more. I hear Brian Armstrong echoing it, and one thing that Ray Dalio suggests is, in order to be a reserve currency, you need to have a principal underlying yield. Like, people want to be able to park their reserve currency somewhere and get 4% on it just inherently, which is kind of what we have with dollars. Uh, so I think critical to like the mass adoption of Bitcoin is also figuring out a sustainable yield source so people can buy this asset and then have a comfortable, albeit relatively low, rate of return, but at least it's doing something.
Yeah, definitely. I mean, 100% agree with you there.
Cool. So, I guess one more question for you, and we're coming up here on time. But what do you think is what are you excited about? Sort of next on the frontiers of Bitcoin and Bitcoin Fi.
Yeah, look, like I think, we've had quite a lot of money flow into Bitcoin builders and Bitcoin DeFi. And,
Mhm.
the things that I'm most excited about are the latest generation of trust minimized wrappers, right? Like if we can get Bitcoin naturally flowing from the base layer to some of these other blockchains, we can start to maybe make it composable and interoperable as an asset within financial systems that are building on some of these blockchains. Um, so I think some of the best versions of this will naturally just want to make their own curated Bitcoin Fi ecosystem, and then have wrappers of Ethereum come into their chain, and wrappers of Solana maybe coming into their chain. Maybe those things are not even necessary to survive, but at the end of the day, I think I'm just really excited for some of the R&D, like BitVM 3, and now Alpine Labs
Mhm.
introduced something called Glock, or garbled circuits. I'm really excited to see a lot of this R&D that really smart people and really well-funded teams have been working on, from my perspective, for over 2 years, to actually become commercialized over the next 3, 4, 5, or 6 months. Um, and I think that's a really exciting thing for the next unlock. Beyond that, would love to see more conversations around Bitcoin-based soft forks come back. We've kind of went from, let's add OP Cat and CTV into Bitcoin, to this whole massive, op return debate that seems to have pulled a lot of the conversation from, having a soft fork that could help, build L2s and build trustless wrappers and so forth. Would love to see us kind of come back to that discussion at some point. But granted, look, I think more attention is going to be great. Web3 is certainly not over. Decentralized finance is truly the future. And so I'm in it for the tech at the end of the day. Like, I know that is sometimes a meme in itself. But on a day like today, when you have Bitcoin go from 122 all the way to 101K, I remind myself of like what I really want, like what I'm actually here for. And I'm here because I'm witnessing the opportunity to move finance and banking into a better, more accessible, more freely flowing system. And I truly am in it for the tech. And investing in teams and builders is kind of how we get there. And I'm happy to be along for the ride for each and every one, building in that direction.
Well, excellent. I think that's a this is a great place to wrap up and leave it. I couldn't have said it better myself. And I mean, man, excited for a free and open financial system. Who isn't? So, Farmer, yeah, thanks for coming on. And where can people follow you and see what's happening in your life, or see connect with
Mostly
you?
on CT. I mean, look, I will say that I try and mix a bit of shit posting, comedy, some satire every now and then, with sprinkles of hopefully intellectual insights once in a blue moon. But they can follow me on Twitter or X at Farmer Joe 0x. It's where I'm most active on. It's where I spend most of my time usually, and it's where a lot of the action is in Web3.
Excellent. Well, thank you, Farmer, and everyone go check out Crypto Twitter. You'll find Farmer there on many a space, but give him a follow. Enjoy the shit posts. I know I do. And thanks, Farmer. Until next time.
Thanks, Davis. Appreciate it.